Good morning, Anna Babineau, Guild Mortgage. I wanted to recap this morning something that I posted in an article over the weekend on Facebook, and that is that Jamie Dimon, who's the JP Morgan boss, said that the Fed declared that they are expecting 7 rate hikes this year. Most people think that the mortgage industry is based on the Fed fund changes, which is not correct. The Fed fund affects the way that the banks get to borrow money from the Fed and then turn around and lend that money to the consumers and businesses. In my world, in the mortgage world, mortgage-backed securities are kind of gauged by bonds. And a year ago, were using a 2% bond coupon to be able to establish a base point for where the rates were kind of going. And that 2% coupon jumped to a 2.5 towards the last 2 quarters of last year. And this year, we've already crossed over into a 3% coupon. Now, why is that important? It's important because the 3% coupon is kind of the start of the rate. Fannie Mae, Freddie Mac, FHA, VA, all of these are backed by standard underwriting guidelines, but they're also backed by Fannie Mae, Freddie Mac, and this is how we are able to sell the paper into the secondary market for those that sell. We service, but we still write under the standardized guideline and with that backing. So if that costs 50 basis points and we're using a 3% coupon, then logistically, one might say you add those two together, and that's where your base rate is going to start. And then we have to look at the risk factors. Risk factors are how much down payment are we doing, what balance in relation to value are we lending on, the credit score. Is it a primary residence, secondary residence, investment property? Is the debt to income ratio of the entire applicant challenged, slim, pushed to the max? Where is the risk factor on that? Is it a condo? There's all these things that go into risk factor. When that's said and done, that should tell you that we are actually butting up to 4% interest rates and crossing over. And in many cases, the individual file is really going to vary anywhere from 0.25% to 1% because there's no two people that are exactly the same and borrowing exactly the same. So I hope that you found this information helpful. Feel free to reach out to me if you have questions at 713-907-5365. And I look forward to talking to you about rates.